The results of the FOMC meeting have come out. It's official, there's no change in the federal funds rate. The US 2-year just absolutely literally exploded through a fresh air gap and is currently 5.1780. Significant upward revisions to the GDP have also been provided. The Fed is expecting not just a soft landing, but increased economic activity. The US 10-year yield has exploded too, and we can see that it's found a lot of support recently and blasted through that upper resistance level. It's currently encountering a smart money sell area around that 44012 mark. Originally, there were going to be 4 rate cuts in the following year. Now it's expected only 2. Rates are staying higher for longer. Global monetary policy, except for Japan and China, has been restrictive. The federal funds rate is now at a 22-year high. The Fed's higher for longer stance has driven interest into the DXY, the dollar-yen pair, and the dollar-Canadian pair as well, but it's punishing the fiber, the Aussie, the Kiwi, and the cable. The global economy is poised to slow as the rate hikes bite. The OECD sees global GDP growth at 3% in 2023 and slightly lower at 2.7% in 2024. Looking at global markets and the S&P 500 futures, we've seen a big sell down. The Nasdaq futures were hit hard. The Dow and the Russell 2000 also hit. Global markets take their lead from the US markets, and we can already see that Japan's market and Australia's market, China's market, has been coming down. The major stock market indices impact crypto. In fact, crypto cannot escape the stock market's gravity. And what we see looking across crypto right now, it's gone red. The Fed is projecting one more rate hike this year, either in November or December. Restrictive monetary policy occurs when interest rates are raised. For the FOMC's meeting on the 1st of November, there's a 29.4% probability of a 25 basis point increase in the federal funds rate. Restrictive monetary policy has come about because of inflation. Whilst the majority of sectors are going down, we can see signs of life in energy and financials. The insurance sector is doing very well at the moment as well. The DXY so far this month has been following a very positive trajectory. However, it's not going to be smooth sailing for long. We're starting to come up to some fairly significant smart money sell levels or resistance levels inside the DXY. There's an inverse relationship between yields and DXY strength and commodities, gold and silver. Gold recently traded as high as 1946, and it's now down to a raft of smart money buy areas, structural support areas inside gold's market. And this chart has been marked up since 1883. US oil has had an incredibly positive run, but we're seeing prices coming down. Oil has been relentlessly pushing through a lot of smart money sell areas, structural resistance levels, and what typically happens at this time, the buyers just get exhausted and the sellers start to take over. Tesla has recently been following a positive price trajectory with the DXY power and the US 2-year, the US 10-year yields power as well. Tesla is coming down. It's very important that Tesla holds this structural support area. It's not through it just yet, but if it does continue to drop down, the next structural support is 249.67. The stronger dollar and rising yields has caused a headache for the major indices. We can see that really clearly with the S&P 500 and also the Nasdaq. There was very strong structural support between 44.11 and 44.39 for the S&P 500. You can see that we're currently below that. The next area of structural support is between 43.69 and 43.76. Upgraded GDP forecast by the Fed, and the boom in artificial intelligence and soon robotics and crypto indicates that risk on will come back into the markets, and Bitcoin is the most risk on or risk off asset class you can find. That's why it's critical to look at. Looking at Bitcoin structural support and resistance levels, and Bitcoin is currently 27,148. We've seen a resistance level, a structural resistance at 27,232. Price has tried to get above there several times without success. It's really trying to rally. And if it actually does get above there, you can see there's a lot of fresh air up until the next structural resistance level, which is around that 28,278 level. We can also see that Bitcoin is sitting above multiple structural support levels. We must always let price reality guide us. Bitcoin is looking quite healthy. You can see how important it is to understand where the structural levels are, support and resistance, on the Tier 1, Tier 2 and Tier 3 charts. With it, you can get synchronized in with the market. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.